And I also keep saying this, that the market is not made for one tool, right? However good your tool is. So in my case, I work a lot with my 10 bar cot, but the market was not made for my 10 bar cot to decode everything of it. So I have to surround myself with an IB and an IS signal. I have to surround myself with a market and a limit order. And I have to surround myself with a cot at the end of the 3 minutes and the cot at the end of the 30 minutes, because the market speaks in different ways. And I have to find it good and find it within me to collect all that information which is flowing from the market, right? So don't just let one tool be the the speaker for everything which is going on, which is happening in the market. The market is different every single day and will speak to you differently every single day. But we'll overcome all of that, and we'll talk to you today about the need of a proper working process, about how with a proper process in place you can negotiate the challenges which are given by markets. So today like I said was a relatively easy session, at least for all of us in the VMR. The bias was super clear, the way of working was super clear, the market was bullish, and it's always an easier market to trade when it is bullish. But we'll be having tougher days ahead, as we had in 2024, and there are going to be a lot more challenges. But I'm here to tell you today that regardless of what challenges the markets give you and they pose to you as we move into this year 2025, so what I'm going to do is I'm going to adopt a middle of the road approach, not really fully bearish, fully bullish, but more of a middle of the road approach, and specifically look at what we are anticipating in the market for those 15 days which are left in the month of February, right? We are focusing on the markets on a series by series basis, and if you've been following me on my Twitter handle, that is the approach I like to take. I believe that with every single series, there is a change of hands, there is a change of inventory. And because of the change of inventory, which involves a change of volume also, so there is a need for a change of bias. And we carry a bias from a start of a series to the end of the series. I'm definitely not going to talk to you about what is going to happen 1 year from now, because I do not know. But what we know is based on the volume which is coming into a series, until that volume stays till the end of the series, we can make a projection on where we expect the market to be. And we break that projection down from a monthly time scale to a daily time frame. And within that daily time frame also, what we do is we break that from a monthly time frame to a weekly time frame. And from a weekly time frame, what we do is we break it down to a daily time frame. And within that daily time frame, we like to look at that market between 30-minute periods and 3 or 5 or 15, depending on your comfort level, 1 minute time frame, 1 minute 3 minutes or whatever okay, you choose. So, good evening, everyone. I hope everyone can hear me. There are no voice issues in the session today. Can I get a few show of hands that you guys can hear me? Good evening. Good evening. Can you have a look at my screen? Can you just give me a few confirmations that you guys can hear me clearly? All right. So it's a Monday evening, and I hope everyone's had a good session of trading today. Thank you guys. Okay, for confirming. Thank you. Okay, that you're telling me. Okay, that the voice is clear. Everything. We are here today to talk about the markets, and I hope okay everyone has had a good session of day trade today. Any of you remember last Monday? It was a 70-point day. Contrast that okay to what we have today, and the markets keep moving, right? The markets keep changing, and there are different strategies which are required for the different types of days we find ourselves in, right? So last Monday we found ourselves into a balance, and that was not very different from what we found ourselves at the open today. And yeah, last Friday was also a very big trending day. The series had just changed, the weekly series that is, and we had a big trend day okay which came in, and then okay on Monday, that was last Monday, the markets went quiet, and we went quiet okay for about 2.5 days. Wednesday we decided to dip lower. Friday was a gap down, and on that gap down okay there was no initiative selling. Supply okay suddenly dried down, and Friday and Monday, even today, we've seen the absence of supply, and the market okay has climbed back okay to where it is right now, right? So we are here today to discuss okay why the market okay behaves bit differently, and same kind of movement, but different kinds of reactions, different kinds of ways okay to understand okay the market behavior. And therein okay lies the challenge okay for us as traders, especially in the derivatives cycle, the derivatives way of looking at things, which, as you know, okay, instrument wise is time bound. It's more volume driven, and it's got a lot of leverage and a lot of other participants okay who keep moving, who keep adjusting okay their positions, etc. Which is why okay we have to be a lot more guarded in what we do, which we have to okay do okay whatever we do, and we have to be at our very best when it comes okay to employing our best okay in the derivatives markets we trade out of, right? Today I'm going to talk to you about market structure, about the movements behind price. A lot of us, including me, okay, we are brought up into understanding that price movement is the be all and end all. And to understand price a little bit more better, we basically work with indicators. We add elements to the chart to help us understand what price is doing, because price is a very complex thing. Like I said, last Monday was a quite 70-point range. Today, I think okay, we got in ourselves a 300-pointer. Right, and it's basically okay more or less at the same levels as it was all through the series. Okay, we are negotiating a small mini balance in the June structure. But why does price behave in a 70-point range one day, and why does it okay work a 300-point range, or the exact same, the same you can see the area of work, the exact same thing has happened. The market hasn't traveled a lot or beyond that 25,000 range, but one day it's done about a 70-pointer, one day it's done a 300-pointer, one day it gaps down, one day it gaps up, one day okay it does nothing. Suddenly, abruptly, in the middle of the day, it
goes up, like last Wednesday, it is going up, and suddenly it decides, okay, to come down. Now, why are all these things happening, and how, as we as a derivative traders, can be alive to what this is happening, and how, okay, it is working, and how, okay, we should, okay, get ourselves, okay, cleared or clued into what is happening. That's what we're going to be speaking about. I don't intend to keep today as a monologue. I'll prefer a two-way dialogue, so I'll pause in between. And if you have any questions, okay, which you want to ask me, which you want to know about more in terms of understanding market structure, price, and the behavior of volume, feel free, okay, to pause me. Feel free to ask me. The comments are open. I'll keep an eye out, okay, on the chat section as well, and you can, okay, talk to me, okay, about what you feel and what you want to ask about the markets over here, right? So we'll keep it two-way. We'll keep the Q&A going, and we'll talk a bit more, okay, about what the market is trying to tell us. So the core idea over here is to understand what the market is trying to tell us. Our view of the market does not really matter, okay, and what really matters is what the market is speaking to us at every single time. Now, one of the things, okay, which a lot of traders are somehow, okay, geared into or born into, is the fact, okay, that what the market did yesterday or what the market did 2 days back is supreme, and that, okay, has an inference or has a way of working on a few days from now. But first and foremost, as derivative traders, we have to understand that what happened yesterday is history. Tomorrow is a mystery. live for everyone? Is my screen live for everyone? All right. I am really not sure, okay, what really happened over there, but that was a disconnect, and apologies, okay, if that broke that communication chain. What was I speaking about? Right. I was speaking to you, okay, about the essence of understanding market information and information, okay, which is in the now that which is happening at the moment. What has happened in the past is gone. That's history. What is going to happen tomorrow is a mystery. But what we can really do is act in the now and understand, okay, what the market is doing right now in the very moment where it is right now, and that has an implication on the market going forward. So if you're the kind of trader, okay, who's always struggled, okay, to get into understanding what the market is doing, the key word for you to understand is that you have to start believing in the market, in what it is doing at the very moment. Disregard, I mean, not disregard in the sense, okay, completely take it out of your window about what has happened in the past, but that is just context. The most important thing is for you, okay, to understand, okay, what is happening in the now. So what we have always adopted or advocated at Vtrender is to understand the market into three phases. The first of those, the bottomist, the foundational layer, is to understand what the entire market is doing. There is a bias in the entire market. The entire market has a way of looking at things, and the you, me, the pros, the FIs, the DIs, okay, what they are looking at it in terms of the entire market at the moment is what you look at in terms of the existing bias of the market. So that's now, that is what you should be thinking about the rest of the market is doing. Now, what the rest of the market is doing in relation to the current market structure, what the market is placed, where it is doing right now, that is what you have to be focusing on as to the structure of the market. Whatever the market is doing, or whatever the rest of the market thinks the market will do, the market, okay, will do whatever it has to do. It does not have to go by the opinion of the minority or the majority. The market, okay, will try to work in terms of what it is already doing, the kind of information which is already built in. And if you think, okay, that all the information is already built in, then the market, okay, will not respond, okay, to that kind of an information again. Okay, if the market is caught by surprise, it was not aware that this particular piece of information was not fully priced in, fully baked in, then the market, okay, would respond, right? And sometimes, okay, you see this, okay, even in the stocks, okay, you track all those earning cycles, etc. The instrument, the stock in question, puts in a very, very good earnings cycle, but the entire market knew, okay, that the earnings was good, so it was rallying, okay, about 6 days before the results announcement. And on the day of the announcement, the stock does not rally at all. In fact, okay, it cools off, okay, and there is some booking which is happening. Now, why is this happening? Because the market, okay, does not believe, okay, in going by what it already knows. It decides, okay, whether this information, okay, which is there, is already fully priced in, fully baked in, and whether, okay, I should react at all or no. So understanding what the rest of the market is thinking in terms of the current structure, the current dynamic of the market is critical. And the number three and the most important thing, okay, which you have to be aware of is what are you gonna do? What is your execution plan? What are you gonna do, okay, with respect, okay, to what the market is doing? So accordingly, okay, what we've done is we basically, okay, organize the market Apologies again, guys. Having some issues, okay, with the screens today. Let me restart again. Apologies, guys. Do we have a live screen? Technical issue which I have very little control about on right now. Let me get the screen going, and we should be able to start. Screens up. I hope okay you guys can hear me. Apologies guys, okay, for those two interruptions. I sincerely hope okay there aren't any more. But some things okay are not under my control. I just doing okay this webinar quickly okay to share some information with you, and fingers crossed okay we don't have any more interruptions okay going forward. So I was saying, what we've done is basically okay we organize okay what the message okay we intend to collect from the market into three distinct variables, and the bottomest of it is understanding what the market is doing. Number two is where the market is positioned right now, what the structure of the market is, and number three, okay, what are we gonna do with respect to understanding and knowing what the rest of the market is doing and where it is placed right now. So what we've done is basically okay we've reworked okay on the tools which we have to understand all this, and I'll be wanting to be as clear as possible over here. As derivative traders, we have to work with tools. If you come into the derivatives market and if you're trading size and you don't have an organized arsenal okay with you, a toolkit okay with you okay to understand okay what the market is telling you, believe you me okay you should not be trading in the market, right? You have to come to the market okay armed, skilled, with a tool set okay which is ready for you okay to work with. And without this tool set, and which we call it a charting application or some information for you okay to understand okay what the market is doing, you will not be able to trade in the market. So what we've done is basically okay we've reworked okay on the tools which we have to understand what the market is doing and where it is placed right now. It's a tough life, guys. Today is a very, very tough evening over here. Apologies once more, okay, for the inconvenience. Are we back? Are we back? So I just have a smile on my face as what is happening. So it turns out, okay, my router is the backup, okay, to the router, okay, which should be working, is suddenly decided to conk off on me this evening. So every time, okay, there is a load fluctuation, even though, okay, we have a balance, the router is not being configured, okay, to the power supply. So that battery is conked off, which is what is breaking my internet, and that is why, okay, we are having these disruptions. So as soon as this session is over, I intend, okay, to go and get that thing replaced. It's one of those minor things, okay, which are critical when it comes, okay, to our functioning, etc. But somehow, okay, that's what has brought a smile to my face. Okay, these things, okay, get neglected, and then, okay, they create the issues, okay, which we have at the moment. Right, apologies, guys, my mistake entirely. I should have had that thing checked, but does not matter. Okay, we'll try, okay, to get on with the show, and we'll see what best, okay, we can do over here. So back, okay, to bring you, okay, to what I was conversing with you about. I was talking to you in interpreting the message of the market in terms of understanding what the entire market is doing, then, okay, trying to understand the structure, the prevalent place where the market is at the moment, and what are we doing, okay, with respect to that information which the market is giving us. So fingers crossed, okay, we can continue this session without any more interruptions. But do bear with me if there is one more, because there is a power issue, okay, which is happening. But we'll see. Okay, fingers crossed, okay, that there are no more interruptions. So what we basically say is, to understand, okay, what you should be doing at the market, we basically, okay, broken our menu or the offering or the tool, okay, which we have into three different elements. And the first and the topmost part of this is understanding, okay, what you need to be doing with respect, okay, to what the market is at the moment. So this is your execution plan. This is, okay, a person, okay, who knows exactly, okay, what the rest of the market is doing, and is prepared, okay, and understanding what the structure of the market is. And now, okay, he decides whether to buy a put, buy a call, short futures, hedges a current exposure, or do, okay, something, okay, new or existing with his existing position. This is, okay, that part. The second part is understanding, okay, what is the structure of the market, okay, what the rest of the market is doing. And this third part over here is what the entire market is doing. Now, what the entire market is doing is not entirely 100%. The market is not functioning like a democracy, where it will reward each and every single trader out over there, right? In fact, okay, it's not a democracy. It's what we call a meritocracy, in the sense, okay, the person, okay, with the best or the highest weightage, highest merit, okay, gets paid the maximum. So the trader, okay, who's got about 100 lots for the same 100 points of move will get paid a lot more than the person, okay, with 2 lots, okay, for that same 100 points of move. Okay, that is the way, okay, the market is structured, and that's the way, okay, the market is functioning, right? So what we do is we try, okay, to keep our focus, okay, on the people who are wanting to move the market, okay, with the largest sizes, with the largest volume. And we do that, okay, to what we call, okay, the order flow chart, in which, okay, we try to understand, okay, what the big boys of the market are doing in the entire market. Now, why do we do that? We do that, okay, because, okay, we want to have a clear understanding, okay, about how the big boys are trading the market. So they would, okay, suddenly sense, okay, that the market is wanting to go down, and they would adopt a short bias into the market. For instance, we were looking at this order flow chart of Wednesday, 3 days prior, just before, okay, we had that big drop out over here. The market, okay, was, okay, going up into those 25,300s. This was 3 days back. You can do that, okay, with this date and picker option also. Wednesday around 11, and I think it was around 12:45 in the afternoon. So if you want to quickly, okay, go to any particular place in the chart, you can do it, okay, via this option out over here, this calendar feature. So this was the market then, okay, that 25,300, okay, it was, okay, coming in, and at this point in time, not in the futures, But in the puts, okay, we saw a lot of short inventory build up. So that time that was the 2500 P of the previous series, which was okay adopting a lot of shorts okay in the market okay at that point in time. So those IBs okay had come in, and this is actually okay the 19th June, but it had come in okay at 1 o'clock 1:15 in the 12th of June contract also. And from 264 292, this option okay went right up to about 392, and it had gapped down okay the next day also. So third IB trade came in, and this is okay what was the positioning okay which was happening via the market. Now the reason okay we do this and we watch this is because okay we want to have a sense of what the big money is thinking, because they are doing all this okay with marked okay with a lot more information at their disposal, and they have already done the studies. Okay, they have already understood okay what the rest of the market is doing. The positioning of all the other participants of the market is already known to everyone at the start of the trading session, and they study that. They understand okay the structure of the market, and then okay they go in okay with their own positioning. And tracking these aggressive players, these players okay with the big sizes, cuts our work in the market, cuts our makes our job easier, cuts the kind of work okay which we have. So that's why okay top of the funnel we have the order flow charts. And then okay to understand the order flow charts okay we also have a look at the market profile structure. But if you were short on time and you wanted to get into a trade right away, my recommendation is okay you start focusing okay on those IB30 signals and the IS30 signals. We've spoken extensively okay on those. There is also a comprehensive okay user manual which you can go through. There are previous videos okay which we have done already for you okay to go and get going and get understanding okay what to do okay with the market okay at that point in time. But tracking the big boys of the market okay, that is okay what you should be thinking about doing as a core strategy going forward, right? So you're not the kind of trader okay when you're coming in and working okay into the elite axis. You're not the kind of trader who's not knowing okay what the market is doing at this stage. The top, you are already knowing what the market is doing, what the rest of the market is doing. But now okay you're looking for your entry, you're looking okay to get into that proper put, proper a long call, short call, whatever okay that bias is at that particular point. You're looking to time your entry in the market, and that is where the information from the order flow is going to tell you okay what you need to do next. If you're the trader who knows nothing, okay, and you have basically been on a vacation, okay, you come back after 1 month, or you're somebody okay who's brand new into the business, then my recommendation is okay that you start off okay with understanding what the entire market is doing first. Okay, try to understand okay, use that top down approach, go into the yearly charts, go into the monthly charts, see okay how the market is doing, how it is placed, Check 1 2 3. Check. Sound up. All right. Let's give this one more go. All right. Number 4, okay, done 4 disruptions. That's the maximum I ever had, okay, doing webinars. Well, we'll keep going. Okay, let's see. Okay, if there's one more break, okay, then okay, we'll redo this webinar again, okay, some other day. But apologies, guys, okay, for what is happening. Never intended, okay, to be carrying on this way, but there is some serious issues, okay, with that router, which is creating the issues. And every time, okay, there is a fluctuation, the router is breaking off, which is why my connection, okay, to you is breaking out over here. All right. I'll make up for this. Okay, we will do a live session one of these days. Okay, and we'll have a look at the market up again. But I hope, okay, that there is some communication, okay, which has gone through about what I intended, okay, to speak to you today, and that was basically, okay, about understanding, okay, the information of the market, okay, clearly, that our view of the market is not important at all. The understanding is, okay, that we have to understand what the market is doing. And when I say what the market is doing, I'm not really, okay, interested in knowing, okay, what the little guys of the market are doing. I'm interested in knowing, okay, what the big guys, the big boys of the market are doing. And today's day and age, okay, we have a process in place, a structure in place for us to understand, okay, what the big boys of the market actually want to do, and how, okay, they are placed in the market, and how, okay, they are looking at that market. And if we can come to a situation, okay, where we can track, okay, these big boys and understand, okay, what they are doing, follow in their footsteps, our job as traders, okay, become that much more easier. And to understand, okay, what the big boys are doing, we'll have to, okay, put in a little bit of work, okay, to understand the process of the market, how they think, how they operate. So that is the work, okay, which is involved. And we have, of course, okay, cannot go to their office and see, okay, what they are doing and how they are entering trades. But what we can definitely do is what we call track their footprints. Where they walk, we can track. It's much like, okay, all these guys, okay, if you ever been on a jungle safari, there are these people, okay, who track, okay, the footprints, okay, of the animal, okay, which is cross, your tiger, your that, and they look at those footprints and they know, okay, yes, the tiger was here walking about half an hour back or 1 hour back, or he walked in a few minutes back. And you keep walking on those footsteps, eventually, okay, you'll get to see the tiger, or you'll get to see that animal. So this is the entire process, okay, which we follow when it comes, okay, to tracking the order flow, except that it is not delayed by about half an hour, 1 hour or something. It is real time. So the person, okay, your big institution puts in an order about half a second back, we get to see that order right now, right here on our order flow chart. Or for that matter, even if you input, okay, a size of about 1 lots or even 2 lots, that also can be tracked, okay, on an order flow chart. But like I said, we don't want to be worried too much, okay, about what the smaller guys are doing. What we want to do is we want to focus, okay, on where the big guys of the market are trading. And if you can find a way, okay, of tracking, okay, what the big boys of the market are doing, and see, okay, where they are initiating positions, where they are entering positions, where they are booking profits, that is the time, okay, you gain a serious edge as a trader, right? Friday, new series. In the morning, the market had gapped down. Now, when the market gaps down, you want to see initiative sellers come in on a gap down, right? So the market is already going down, and then, okay, you expect, okay, the seller to come in and take the market down even further. That is the common way of thinking. But what would you do if the seller, instead of adding exposure, decides to book profits? So when he books profit, what we are saying is that the supply side of the market, okay, is getting cut. And when the supply side of the market is getting cut, there is no fuel for the market, okay, to keep going down even further. So when that fuel is taken away, the supply side fuel is cut, the market, okay, has no option but to rise. So we saw this all through Friday. Supply was getting cut, and we saw this all through today also. Supply was not there at all, and demand, okay, had an easy job to put the market up. Now, this is, okay, the order flow of today. what can happen tomorrow could be completely something completely different. So that's why we say, okay, we don't go too much by what has happened. We don't want to think too much into the future also about what can happen. What we want to stay focused on is what the market is doing at the moment, right here, right now. And if there is a big guy coming in and tracking and trading a position right now at the moment, by you going and tracking him, and by you trading with him, you can be on the right side of the market, instead of worried about 300 points later lower, whether you should join in the long side or the call side. You are not that player who is there 300 points later thinking about what you should be doing. In fact, the smart money who built that position, 300 points later, he's at least booked 50% of that position. And here you are, who does not have an order flow chart. You're thinking, whether I should go into a trade or not go into a trade. There, he is already booking positions. All right. So get that, bias of the market, sorted, and try to align, with what the market is doing, at that moment, right here. Right. So once again, guys, my apologies, for not having a seamless session today. I will make it up to you. We'll do a live session one of these days, and we'll talk, and look at those charts, in live market hours. But I'm going to take a small pause over here. I didn't stop for any questions. If you have any questions, please feel to shoot them. I'm hearing you. I'm listening to you. I'll be reading, those questions also. So if you have anything to ask, please feel free to ask right now. Please do one session on participant-wise data. We can do a session on participant-wise data also. Shiva is asking, today Nifty spot confirmed a monthly FA at Friday's low. So the ATR objective is there in the charts directly. So what you can do is to get your ATRs, you can go straight into the options table. And here you would find the ATR ranges which are there. So what we do is we add these up already. So your series range, your 1 day VIX range, the range of the spot, etc. So that's about 676. This is for the entire series. So this is the range you work up with, and then further down you would get these kind of different ranges, etc. So this is one way of understanding where you want to be looking at the market in terms of ranges, etc. The ATRs and etc. Can be found out from the index table also. If you go down over here under indices, you would get ATRs over here also. So the 5-day range, 14-day range is right here for the Nifty ATR. Go by these figures because they are dynamic. We are not going in by a constant number of 1 year back or 10 years back. These are updated based on what the market is doing every now and then. In fact, for the past 5 days, this is what the ATR is. So we are not going by the ATR of say of 2020 or 2022 or 23-24. We are interested in the number of 5 days back and 14 days back, and these are constantly updating. So, and you'll find for the other instruments also out over here, the 5-day ATRs and the 14-day ATRs all out over here, right? So I hope this has been helpful. There has been a change in the navigation menu which we have. I'm of course on the elite plan, and I work a lot with order flow, and I highly recommend order flow for everybody who's not getting the right answers from the derivative market. It's the edge which you need to add to your trading arsenal, right? So this is now structured in the top half, which is what you should be doing. This is what the rest of the market is doing. So the NTM volume X chart is a very, very important chart we are looking at every day in the market. This is the NTM volume X chart of today, and as you know that today was an up day. The market moved up and it started moving up aggressively from that 10 a.m. There was a little slight slight down between 9:45 to 10:15, but have a look at this divergence, okay, which set up over here. So this is that call side, okay, which was moving up, okay, from there, and this is the purple is the put side, okay, which is here. But the larger the divergence between the two, the stronger is the bias in the market. The sideways market would not have this kind of a divergence between the call side volumes and the put side volumes. Now, the reason, okay, we are looking at this NTM volume X chart is because this is something, okay, which is live data. So we have the same concept running on an open interest chart. And most of you, okay, are used, okay, to tracking the market in terms of open interest. But what we do is like we the data, okay, which comes in from the exchange for the open interest, that's a 3-minute delayed data, right? And today's date and time, I don't think so it is advisable, okay, to work, okay, with a 3-minute delayed data. In a 3-minute time frame, 15 or a 20 rupee option can go up to about 60 rupees, and I'm sure a lot of you have seen it before. So that it's not right, okay, to work with delayed data in today's date and age where the markets are becoming faster and faster. The reason, okay, we have the NTM volume X chart on screens is because, okay, that does not have any kind of delay whatsoever. It is live market data, and it is telling you, okay, what has happened, okay, a few seconds back, right? It's not as fast as the order flow chart, but it's typically, okay, a very fast way, okay, to understand what the market is doing at any point in time, right? So this is something, okay, which you need to add to your arsenal. Again, okay, the entire tool structure which we have here at Vtrender is structured around an understanding of volume, the volume print of the market, that we say, okay, is the reason, okay, why price does what it has. The volume of the market is high, the range of price movement is going to be higher. When the volume of the market is low, like last Monday, last Tuesday, the range of price movement is also going to be lower, right? So the entire focus, okay, what we've done is we moved it behind the movement of price, and we've tried to explain to you why these charts, why price does the things it does. And for you to understand that, you'll also, okay, have to modify your thinking a bit and go behind the candle, go deep inside the candle and understand, okay, why, okay, price moved the way it did in that candle, right? So I hope, okay, any other questions, okay, are there, and if there are any, okay, please, okay, feel free to ask. It's gonna be nearing 6 p.m. I do hope, okay, this session, okay, was insightful and helpful. I do apologize, okay, for those constant breaks which we had, but like I said, okay, we will make it up to you, okay, and we'll have a live session one of these days very soon. Don't think so there are any more questions, but I want to thank you all, okay, for joining me in this webinar today. I hope, okay, there was something, okay, which you can take away. There's going to be a recording of this. We'll polish it up a bit. We'll remove those breaks and we'll put it up on the YouTube channel as well. Do give us a follow on at Vtrender for any of these webinars. Okay, we'll announce it over there. We also have a new handle, okay, for charts, chart specific information. If you're just looking at information to come in via charts, that's at charts, at Vtrender charts on X, on Twitter. Do give us a follow over there. We are posting important things, okay, about the changes which are happening in the charts thing, and there are a lot of changes planned. A lot more things, okay, are coming your way, just to ensure, okay, that we have a big edge, okay, when it comes, okay, to understanding the fast changing derivatives markets we are trading out of. Right. So I hope, okay, this was good for everyone. And if there's anything else which is needed in terms of information, etc., my Twitter is always open. That's am_shy. You can reach me anytime over there. My DMs are also open. You can reach up to Uttam also. You can write to us at support@vtrender.com. Give us a follow on at Vtrender on X. We are there on Instagram also. Look me up on Insta. That's am_shy on Insta. The same thing as my Twitter ID. Become a lot more active on Insta also. So if you feel, okay, that that is your vibe, you are more active over there, do give me a follow over there as well. Right. So signing off for now. Thank you all, okay, for joining in. And there is the next webinar, okay, we'll announce it on Twitter very soon. Thank you all for joining in.